Good morning, everyone. How's it going? It is 6 a.m. on December 21st, Thursday. We're half an hour before the market's going to open. We had a couple of big economic reports this morning about half an hour ago. GDP was one of them. So let's take a look at how those came out and how it's affecting the market. So over here in our economic calendar, we can see that we had GDP and jobless claims, Philadelphia, Fed, but GDP is the really, really big one. And we did get a pretty large reaction off of it. So on the quarter on quarter, a little bit less significant, but we're over here on annual rate 4.9%. Consensus was 5.2. So we actually grew less. That was a negative growth, not negative growth, but less positive growth quarter over quarter. And then PCE, personal consumption. So this is the one that we really want to look at in terms of Fed and inflation. And that did come down, and that did come down quite a bit more than what the consensus was, meaning that the amount of money that people are required to spend in order to cover their basic needs is going down. So that's disinflationary. And so the market is reacting very positively to this. If I look at the pre-market, you can see right at 5:30, it went up quite a bit, or it came down a little bit, but we're still quite a bit higher. And we were already at the pre-market level, we are already significantly higher than where we closed yesterday. So it really does look like that bear trap developed. The difference is there's a gap up. There's quite a significant gap up instead of, hey, we came down and then we get to see that snap back up during a trading session. This one is gapping up. So you really had no chance. Either you caught it at the end of the day yesterday, or because I was telling you guys about those AMD traders and the Tesla traders yesterday. There was actually a MU trader who came in 1 minute before the market closed, who bought a whole bunch of calls. I kind of joined in. I actually joined in on the AMD trade. So if you didn't catch that last minute trade, then this morning is a little bit too late to chase it. So hopefully you already had longs in your portfolio, and if you were well hedged, kind of like the examples that I showed you yesterday, then you didn't have to panic sell. And if you didn't panic sell, well, this morning you're really going to be reaping the benefits of that when we open. As we open, if you have some really good profits on some of your positions, you might consider taking those off the table, or at least partially taking some profits off the table. In terms of direction, well, we are definitely at a positive bias. Let's take a look at our futures. So yeah, this is non-random and up. Look at the NASDAQ, that's up 1%. The S&P 500, 0.75, so 75 basis points. And pretty much the same for, well, those are both S&Ps. The Dow about 0.7% as well, and the Russell over 1%. So definitely very strong positive bias this morning. Let's see how TLT is coming on the pre-market. So TLT is also up. So TLT never participated to the downside. And that was one of the clues that it was a bear trap. So definitely very, very positive. We are almost guaranteed to end the day higher than yesterday's close. So we should see in the S&P 500, for example, we'll have a close above this MA8, EMA8. How exactly how far and whether that bar is going to be red or green, we don't know. Now, likely that we're just going to, from the zoomed out perspective of multiple days, it's still going to be chopped sideways. So unless we recover and completely undo everything that we lost yesterday and go even higher, then it's just going to be another sideways chopping day. So a lot of intraday movement, not a lot of directionality, a lot of volatility, not a lot of directionality. There are a lot of intraday directionality, but not a lot of daily directionality. So that's very, very typical of this very quiet period in the markets. Anytime we have a lot of traders on vacation and low volume, then we see this type of behavior. So I'm not going to expect this to go directionally significantly higher. Today is most likely going to be a chop sideways type of day, because from this point, for us to break down, that's going to be hugely bearish sentiment, because we would have to have lost the 0.75 to 1% that we've already gained in the pre-market and then go even lower. And that's just not that likely. So we'll expect to close higher than we closed yesterday. Intraday, we could get directionality. It could be up or down. And right now, we just have a strong upward bias. So we want to be careful. We want to see this, the first half hour or hour today is likely to be especially volatile compared to previous days, because there was such a huge drop and then such a huge pop this morning. So there's probably going to be a lot of people taking profits, those MU traders, AMD traders, Tesla traders, unless they believe that they can push this higher. Or we had a FOMO right here. Oh my gosh, I stopped out of my shorts and now look at, we're like so much higher. Let me jump back in. Those traders could hang on for another ride upwards. So those guys are probably more professional, not retail traders. So I wouldn't be surprised if we rally at the open and those guys just wait for retail traders to jump back in and they dump their contracts or they dump their shares into the first half hour to hour after we get a little bit of a pump up. So just expect a lot of movement, a lot of up and down movement throughout the day, probably multiple times. Tomorrow, we have our personal income outlays. This is going to be and consumer sentiment. The consumer sentiment after the GDP report is not going to be a huge deal, but personal income outlays, we're going to get this core PCE, so an even deeper look of the PCE that we just got today. This will be a lot more detailed, and that could send us again in a little bit of volatility, although it shouldn't be surprising because the directional of that should still be the same. So if we beat to the downside today, then we should see a beat to the downside, or at least downside movement tomorrow as well. So unless people are surprised by that and they're not thinking that far ahead, we shouldn't have the same amount of a big spike tomorrow, but we'll probably still get one. Now, in terms of sectors, we should be paying careful attention to sectors right now because of this shakeout. This shakeout shows us potentially, we'll see in just a moment, it can potentially show us where weakness is in the market, because when we're going straight up like we have been for the last 3 weeks, 4 weeks, that it is very difficult to pick out laggards. It's really difficult to pick out the ones that are underperforming. We were able to pick out a few of them the other day when I showed you ones that are still making lows in terms of while the market was making these highs, but there weren't that many of them. So outside of those, there's going to be a lot of hidden weaker stocks that are still pumping higher. They just weren't pumping as higher as fast, or they're still barely keeping up with the pack. But then yesterday with that downward movement, they would have lost a whole bunch of money, and then they won't recover as well today. An example is you saw in the aftermarket video yesterday, I had a position in Kellogg's. Right? And Kellogg's, you see, came way, 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 way down yesterday. We happened to have a green bar yesterday, but this is still significantly lower than the previous day. It was down 1.14%. But look at the open right now. At the open, it is even. Looks like it's going to open at 53.03. And we closed at 53.03. So that means that when it came down, Kellogg's participated in that. But when we are gapping up today, this morning, it doesn't look like, at least so far, it doesn't look like Kellogg's is going to participate on that. So that means Kellogg's is very weak to the market. Another example is AWK. You saw this in my portfolio as well. Same thing. Participated on the way down, But at least as of the open right now, let's take a look on an intraday AWK. They didn't have it. Okay, so maybe not. We could be wrong on that because we didn't get any pre-market data on those. But if we can identify, let me try one more FE. FE was another one that we had in the portfolio. Nope, none of these are trading pre-market. But the point is, if we have stocks like these that came way down with the market, and this morning they don't gap up with the market as well, we will know that those are weak to the market, and those will be short opportunities. So when we get a pullback in the market, a real pullback, not a fake pullback like we got yesterday, then we should see those names break even lower than they did. So yesterday they probably matched the market, or maybe was slightly weaker to the market. And then if the market goes and starts to do a real pullback, then they'll be even weaker to the market if they don't follow the market back up. Today is going to be important, or we'll watch for that in the aftermarket. We might be able to start getting some clues right now, at least at the sector level. So we'll do a quick look at the sectors, and then we can look at specific stocks in the aftermarket. So XHB, strong to the market actually, because it didn't come down. So the market came down. All the major indices we saw yesterday in the aftermarket came down to their EMA 8, and XHB did not. And XHB is interest rate sensitive. TLT did not. TLT went up. The treasury bonds went up. But XHB did go down, but it didn't come down nearly as much as the overall markets. So XHB is strong to the market. So this is the opposite effect of what I was just talking about. If the markets are strong and keep on going up, XHB is a very good place to start looking. Retail as well, although not as strong as XHB, it is still well above its EMA 8. You see like semiconductors came and touched its EMA 8, it actually crossed a little bit below it, so slightly weak to the market. XLK matching the market, pulling down to its EMA 8. Russell 2000 also did not touch its EMA 8, but Russell 2000 is a small cap index. So if I look at any small cap stocks that did touch their EMA 8, then they would actually be weak to the market. So I need to discern if I should be comparing to the S&P or to the NASDAQ or to Dow Jones or to the Russell 2000. For the most part, S&P and Russell 2000, because the Dow Jones and the NASDAQ are covered by the S&P 500. So XLF came down a little bit below its EMA 8, so a little bit weak to the overall markets. So you get the point. So I don't need to go through every single one of these sectors, but XHB and XRT are slightly strong. So right now we're getting a clue of these two sectors are strong to the market. If we have strong upward bias today, those are places to be in. And then we will get a clue afterwards on the ones that are weak to the market. For XLV, very weak to the market, came all the way through its EMA 8, almost all the way down to its EMA 20. So what we'd be looking to do is reconstructing a balanced portfolio like we showed you last week, where we have a few longs and we have a few shorts, and the longs are in the strongest sectors and the shorts are in the weakest sectors. So right now I'd be going longs in XHB, XRT, shorts in XLV, XLV, and XLE is hard to say, XLP. See, XLP was very weak to the market as well. So that's what we'd be looking to do. So this afternoon, after we see where the market lands, we're going to start looking to reconstruct a portfolio based on those sectors. Okay, so that's it for today. Watch out for the great potential for volatility today, and then I will see you in the aftermarkets.